Hi, this is Mijun from Mijusilon University. Let's begin today's Mijusilon news for September 12th. Welcome to Mijun, where we continue to uphold the fundamentals of investing in United States stocks as always. It's a joyful Friday. Mijun family, I wonder if you've made a lot of good plans for the upcoming weekend. Here in Malaysia, where I am, there are many national holidays. There's a good reason for that. Some of you might already know this, but Malaysia is a place where many different ethnic groups live together. So just like the country's name, there are a lot of Malay people here. Additionally, other ethnic groups form part of the population. For example, about a quarter of the total population is Chinese, and there are actually a lot more Indian people than you might expect. In addition, there are various ethnic groups we call natives who have lost their countries, so in fact the languages they use are all different. That's why English was made the official language in Malaysia. One of the main reasons my family planned to go to Malaysia is because English is generally spoken there. So, most of the population is able to communicate in English. I thought that this could help us settle down in Malaysia for the long term. Anyway, thanks to that, there are so many public holidays. We even get Christmas off. Not only Christmas, but there are also a lot of holidays for Chinese festivals. So we get a long break during the Lunar New Year, and there are also a lot of Malaysian holidays, so we get those off too. We even get Indian holidays off. Because of that, it feels like there's a long weekend once or twice a month. Next Monday and Tuesday are national holidays. So this weekend, we also have a 4-day holiday, and coincidentally, my son's birthday is also next Tuesday. So this time, I don't think I can just let it pass. I'm making plans to spend some enjoyable time with the kids. Since I'm still not in perfect condition, I'm preparing a bit of a luxurious holiday. So there's a chance that I might not be able to properly broadcast on Monday and Tuesday. If my condition improves, I might record some extra content over the weekend, but I wanted to let you know in advance that I may need to take a day or two off. This birthday for my son is quite important. He's turning 13, and 13 in English is 13. So from 13 you become a teenager because the word ends with teen. So I've prepared a surprise gift for my son who's officially becoming a teenager. I'm not sure if he'll like it. Anyway, this weekend is a 4-day holiday, so I'm feeling pretty heavy-hearted. It's easier for me when the kids go to school, but just thinking about having to take care of them for all 4 days makes me feel overwhelmed. Anyway, I'll try to hang in there and survive these 4 days. Today's big news for September 10th begins now. Let's begin. These days, at the beginning of the broadcast, I read subscribers' questions and tried to give my own answers. It seems that a lot of people really like this segment. So today as well, I'll start by reading a valuable question left by one of our subscribers. Alright, first, this is from someone using the identification dbichoy160 I've been diligently subscribing to and learning from your YouTube banding videos. Thank you so much. I have one question I'd like to ask. My cash ratio is also about 20%, but since I don't know when I'll invest it, I'm keeping it as a deposit. However, as the timing of the investment gets delayed, I feel like holding on to this cash is a bit of a waste. I'm really curious about how Miju manages or operates his cash. Right now, since David Choi said he's watching the banding video, he's a member. So you probably know about my cash holdings. As you know, my cash holding ratio is over 20%. What that means is, David Choi might think that 20% is a bit too much cash. Depending on the person, some people are fine with just 10% in cash and some people don't need any cash at all. And there are people like me who feel comfortable with about 20% in cash, while on the other hand, there are investors who need to hold 30% or even 40 to 50% in cash to be able to sleep well at night. So I want to emphasize that the proportion of cash isn't something that's set in stone. In my case, even as I watch the stock market keep going up, I've never once felt like I'm missing out. On the contrary, as this upward trend continues, I actually hope that I won't need to use the cash I'm holding. But if, like David Choi, you feel like it's a waste to be holding cash right now, then maybe reducing your cash holdings a bit could be an option. That's what I started to think. And there's one more thing I'd like to add. This is a screen I prepared to show you a little later. The American Association of Individual Investors survey results were updated yesterday. The survey ended on September 10th. As you can see, this is market sentiment. Currently, only 28% of investors participating in the market believe that United States stock prices will be higher in 6 months, showing a negative outlook. 22.5% are neutral, and 49.5% actually think that stock prices will be lower than now in 6 months, expressing a negative opinion. How should we interpret this? This is a big problem. Instead of thinking people are really negative right now, I should also leave the United States stock market. Nearly 50% of people have a negative sentiment, right? That means these investors have most likely already sold all their stocks or at least significantly increased their cash holdings. In other words, if stocks drop even a little, there's a lot of money ready to buy them. It's a market overflowing with cash. It means there's a lot of liquidity. So it's actually better to interpret this in a positive way. But on the other hand, what I also want to say is, earlier David Choi, you were actually dissatisfied with the stock market going up, right? Now, if we just pause for a moment and think about this, would I really have been able to feel this relaxed if I didn't have any cash on hand? That's because about half the people in the market right now, they sold their stocks out of anxiety, right? On the other hand, people like us who have cash are waiting patiently for stocks to drop. Just waiting. This is the power of having cash on hand. Now, the reason we don't have to tremble with anxiety when so many people are feeling nervous like this, even though it's only a small portion, like 10% or 20%, having this secured as cash gives us tremendous strength. So, feeling like you have too much cash and thinking it's a bit unfortunate or regrettable to have cash, if you think about it, that's actually a good problem to have. The fact that we're not nervous even though stock prices are hitting all-time highs day after day means, paradoxically, that we're able to enjoy the bull market with peace of mind. Today, I'll read just one more comment. The second question is a valuable message left by Kim Jong-hee. Here's my question. Comparing Broadcom, Nvidia, and Advanced Micro Devices. Advanced Micro Devices' net profit is significantly lower, and since they're all semiconductor stocks, I don't see a reason to hold Advanced Micro Devices together with the others. A few months ago, when the momentum was really good and you recommended it, I bought it too, and have been holding it. The other day you said it would be risky if it couldn't rebound after a drop, and although it seemed like it was going up, it's falling again. I think it would be better to sell this and buy Nvidia instead. I'd like to hear your advice, Mijun. When I began investing in United States stocks in 2022, the first show I watched was Mijun's broadcast. I listen to your broadcast regularly because I've made a lot of profit. Thank you. I think you asked this after watching yesterday's broadcast. Yesterday, when we compared and analyzed the profitability, there was a very significant difference. For example, Broadcom has a gross profit margin of 77% and Nvidia is close to 70%, but Advanced Micro Devices is only about 50%. It's even lower than Taiwan Semiconductor Manufacturing Company, a company with manufacturing plants and high gross profit margins. This shows strong price competitiveness. That's the perspective to take. Net profit margins make it even more impressive. Because Broadcom is at 31.6% and now Nvidia is over 52%. But in the case of Advanced Micro Devices, it's less than 10%. And even Taiwan Semiconductor Manufacturing Company is showing 42.5%. Companies designing semiconductors have net profit margins under 10%, while those manufacturing them using these designs see margins over 42%. It's ironic. That's how we can see the power of the world's #1 companies here. Both Nvidia and Taiwan Semiconductor Manufacturing Company are #1 companies, and we can see that from their margins. So looking at it this way, honestly, we could just buy Nvidia, Taiwan Semiconductor Manufacturing Company, and maybe even a bit of Broadcom. It makes sense to invest only in these kinds of stocks, right? But stock investing isn't that easy. With stocks, even if you only hold the ones with the best fundamentals, they don't just keep going up. If the situation slows down even a little, for example, if a company that had a 100% growth rate drops to 80%, the stock price often falls. So what's important is, after hitting the peak, if things slow down even a little, that's a warning sign. Even if a company's situation is bad, if this is the lowest point and things are expected to improve, the stock price often rises sharply. So sometimes you might see articles about a stock going up 100% or jumping 50% in a single day. The common thing about these articles is that usually the company was on the verge of bankruptcy but managed to avoid it. In such cases, the stock price may suddenly jump by 50% to 70%. So it's not just about analyzing fundamentals and finding the best stocks. We also need to consider which of these companies will at least maintain their fundamentals, or if they might decline further in the future. All right, let me show you Nvidia for a moment. The growth rate is very important, right? Yesterday we discussed profitability, and while it's important, continuous growth is even more crucial. Now, if you look at earnings before interest, taxes, depreciation, and amortization, Nvidia's earnings before interest, taxes, depreciation, and amortization growth rate was 60 to 63% over the past 12 months, and it's expected that this growth trend will continue over the next year as well. Although the sales growth rate drops a bit, from 71% to 65%, it's still manageable, so you can see it that way. Profitability is actually improving, so the current profit growth rate looks very good. Let's scroll down and take another look. Earnings per share. Earnings per share is net profit divided by the number of shares, so it refers to earnings per share. Earnings per share grew 64.8% last year, and projections for next year range from 60% to as high as 85%. It's being projected that net profit could increase by about 70% over the next year. Therefore, Nvidia there's still no sign that growth is slowing down, and that's why the stock price isn't dropping. You can see it that way. So what's important for us is this. The current situation matters, but it's even more important to know if this growth will continue and if tomorrow will be better than today. That's what we need to measure. As you mentioned, Advanced Micro Devices is showing very poor numbers right now. The question is, can these numbers improve from here, or is it possible that these poor numbers will remain the same or even get worse in the future? This is something we need to pay attention to. There's a good example, and that's Tesla. As you may know, Tesla surged 6% yesterday, and it's one of the stocks with the best recent performance. Whenever Tesla releases a report these days, it's always the worst. It's always negative compared to last year. Even though the fundamentals have completely collapsed and things look terrible, it's really hard to understand why the stock price keeps rising like this. But if we look further down and check the growth trend, we can find some answers. Looking at sales figures, Tesla's revenue has remained the same for the past 2 years. And in the case of this year, we're actually expecting about a 5% decrease compared to last year. It's the worst right now, but the thing is, it won't get any worse. Because in 2026, sales could grow by nearly 20%, and the following year, it will grow by more than 20% again. So, they're sending a signal to the market right now that this is the bottom. It's the same if you look further down at the earnings per share or earnings per share. 2 years ago, it was a great company making $4 or $3 per share, but now in 2024, its net profit has dropped by as much as 52%. And then for this year, they're expecting another minus 33%. That's the worst. Now, for 2 consecutive years, the earnings per share has dropped by 52% and then by 33%. But now they say it's hit the bottom because next year there's a possibility that earnings per share will grow by 56%. And the year after that, it could grow an additional 41%. Which company has hit the bottom like this? Now that it's past the dark times, it should gradually improve if that outlook is given. Even when things are bad, the stock price often rises. Because of this, I think investing in stocks isn't that easy. And I think I should add one more thing in case anyone misunderstands. That doesn't mean I'm recommending that you should buy Advanced Micro Devices stock right now. Because among the various stocks I have in my portfolio, I tend to allocate more funds to the ones with the strongest momentum. In the case of Advanced Micro Devices, its momentum has worsened too much right now. As the members know well, I recently reduced my holdings of Advanced Micro Devices stock by a lot. There was a good reason for that. This chart here is Advanced Micro Devices' one-year chart. If you look at Advanced Micro Devices' one-year chart, you'll see that there have been several very bad signals repeating. First, the orange line represents the 21-day moving average. Advanced Micro Devices stock had a strong upward trend along this line, but once it dropped below the 21-day moving average, it started trending downward. So, the first negative factor was that the 21-day moving average, which acted as a short-term support line, was broken. And the second thing is, if you look here, there was a horizontal support line. This area is around $161. This was the previous high point. So if it had bounced here, it would have been a strong signal, but it couldn't hold and broke down. That's the second negative factor. The third is the green line, which is the 61-day moving average. So it's a very important tool for measuring the midterm trend of a stock. But unfortunately, the current stock price has also broken below the 61-day moving average. Since both the 21 and 61 have been broken consecutively, we can say that Advanced Micro Devices' current momentum is at its worst. Moreover, the 21-day moving average keeps declining, and the gap with the 61-day moving average hasn't widened much. Therefore, if the stock price continues to drop just a bit more, we need to keep in mind the possibility of the well-known death cross occurring. So right now, Advanced Micro Devices is like a falling knife. For the time being, even if the stock price has dropped a lot, I personally think it's better to refrain from buying the dip. Though it's a bit late, I'll summarize yesterday's United States stock market highlights. If you look at the S&P 500 map, it's filled with a very desirable color. But actually, some of the Media One family members may not have really felt this upward trend yesterday. Because yesterday, there was a rotation of funds. Some money flowed out of the stocks that had been running hot and moved into stocks that hadn't been performing well until now. So while overall market breadth was strong, it was just an average day for the artificial intelligence beneficiary stocks that had been leading recently. That's how you can see it. If you actually look at the movements of various indices, not a single index fell yesterday. That means it was a great market where most stocks rose together. To do that, you need capital. As I always say, in the short term, the stock market is a zero-sum game. In a zero-sum game, if there are stocks that go up, there must be stocks that go down. But as you can see, yesterday there were so many stocks that went up. So, where did this capital come from? If we look at it, it seems that a lot of profit-taking happened in the stocks that have already gone up a lot. I think that's a good way to sum it up. Please keep that in mind. Anyway, with most sectors and stocks rising all at once yesterday, the breadth of the market suddenly became much wider. The market breadth, which was only 53 yesterday, has now risen to 63. Among the top 500 companies that make up the market, 63.8% have stock prices above the 51-day moving average, which is showing a very positive trend. The percentage of stocks with a strong long-term trend increased from 60.03 yesterday to over 65% now. Now the volatility index has dropped further, it's at 15.35. So the volatility index is still showing an upward trend, so don't worry. There's no need to leave the United States stock market just yet. That's the signal it's giving us. The Fear and Greed Index rose slightly from 52 to 53 yesterday, but remains nearly unchanged. So, we can conclude that the Goldilocks situation we're enjoying right now is all clear. The market score has dropped a bit, down to 84, but personally, I don't think there's any significant change being detected. Now, the most important thing was the American Association of Individual Investors survey results. They were really good, because you have to think in a contrarian way about this. There are still so many people in the market who have a very negative outlook. There are that many people who have sold all their stocks and are just holding cash, waiting for the stock prices to fall. So what that means is, if the stock price drops by about 3% or 5%, there are a lot of people who will come in. The fact that there are many negative investors means that A sharp market crash is unlikely since plenty of money is ready to enter, creating buying pressure if prices drop. You can try thinking in a contrarian way like this. Now, next is the performance of Mijuin's top picks. Until yesterday, there were 18 stocks in Mijuin's top picks, but one more has been added. Let's check together which stock was added. So, yesterday, 6 stocks went up. Tesla performed the best, rising by 6.04% and recorded the highest return among Mijuin's top picks yesterday. The second stock is one that I newly bought yesterday. It's an exchange-traded fund called ETHT. This exchange-traded fund, doesn't the name sound familiar? You can think of it as the ProShares Ultra Ether exchange-traded fund. It's almost the same format as the B2 we're investing in. B2 is Ultra Bitcoin and ETHT is Ultra Ether. That's how you can see it. Right after I bought the stock yesterday, it maintained a sharp upward trend and jumped by as much as 4.99%. Third, Coinbase rose 2.73%, B2 increased 1.67%, Astera Labs gained 1.1%, and Google saw a slight 0.5% rise. The rest are all in the red. The good news is that the declines weren't that big. Bitcoin dropped slightly by 0.07%. Nvidia down 0.09, Strategy 0.13, Meta 0.14, First, Solar 0.24, Talon Energy 0.43, Taiwan, Semiconductor Manufacturing Company 0.59, Palantir 1.43, Advanced Micro Devices 2.43, Vistra 2.47, Broadcom 2.69, Credo 2.83. Lastly, Celestica dropped by 2.88%, recording the worst performance. All 4 stocks that fell the most yesterday had seen the biggest price increases over the past week. For example, Vistra went up by 11%, Broadcom by 22%, Credo by 31%, and Celestica was also a stock that rose by more than 19%. Therefore, it can be summarized that yesterday, as funds circulated, there was some profit-taking in the stocks that had risen the most. However, even so, profit-taking is still happening. Stock prices didn't fall much. The reason is, as I mentioned earlier, there's so much idle capital waiting. So when good stocks like these drop, a lot of buying comes in. That's how I would sum it up. When I buy or sell a particular stock, I share it in real time with the members of the Ms. On membership that I run. So yesterday as well, I bought ETHT, which is an exchange-traded fund that tracks Ether and uses leverage. I shared this trading situation in real time. As you can see, I bought at $103.8 and the number of shares I purchased was 88. So I revealed that I bought this kind of stock. It seems like some people are a bit puzzled about this trade, so I think I need to clear up any misunderstandings. First of all, this is from someone using the identification Ondambi Papa. Thank you for your high quality and great broadcast. After seeing you buy yesterday, I also entered the ETHT B2 leverage product. But honestly, considering your principles of long-term and momentum investing, Mizon, wouldn't it be more in line with momentum investing to just buy Ethereum or Bitcoin spot instead of this product? That's what I was thinking. You said trading coins was hard in the United Kingdom and buying CoinSpot ETFs is tough in Korea, which is why you did it. Is it also difficult in Malaysia, so you're using leverage? That's the question that was asked. There's one more person. This time it's from someone with a really great username, Mansa Hyong Tong Unsu Daetong. I've long been grateful for all the help I've received from Mizunim's YouTube and Pending. However, lately, I've noticed that Mizunim seems to be leaning more toward momentum investing. I understand Mizunim's intentions well, but seeing even leveraged buying of Ethereum, am I the only one who feels like my investment style is drifting further apart from his? That was a rather concerned comment. I've changed, and I've changed a lot. One of my biggest strengths, I believe, is flexibility. Those of you who have been with Mijuyin's show for a long time probably noticed that I've been transforming a lot compared to 2020, 2021, 2022, 2023, and even 2024. I think flexibility is the most important trait for stock investors. The world is changing so quickly, and in order to adapt to this world and find the right investment opportunities, I can't afford to stay stagnant myself. I need to keep paying attention to new innovations, and I also have to keep changing the way I used to think. That's why we subscribe to and watch so many YouTube channels. I want to say that it's important to evolve your thinking little by little by talking with many people. In my case, I talk a lot with my wife. My wife is very curious. You could say she's the curious type, while I'm more of a cautious type. So when it comes to investing, I'm quite conservative, but thanks to my wife, I'm breaking out of that tendency a lot. For example, in the case of Bitcoin, it's been just over a year since I started investing. Before that, I had a very negative view of Bitcoin, but after talking with my wife, I heard a lot of positive things about it. That's how I started to take an interest in Bitcoin, and based on the law of supply and demand, I came up with my own investment principle that the price of Bitcoin is bound to go up, so I've been investing accordingly. It's the same with buying Ethereum now. It's actually an Ethereum-related exchange-traded fund, but for it to succeed, Ethereum itself must perform well. So, from my perspective, even at this point in time, I see a very positive investment logic in the asset called Ethereum. That's why there's a high possibility that Ethereum will continue to rise. So as of now, I want to say that personally, I believe that investing in an exchange-traded fund that tracks Ethereum, even though it uses leverage, has a very high probability of rising compared to the risk. And there's one more thing I'd like to make clear. I feel that there's a strong tendency toward momentum investing, and watching the leverage buying of Ethereum has solidified that feeling. In my view, momentum investing has nothing to do with stock selection. Momentum investing is used in a different context. I've already built my portfolio in advance, right? Let's say this portfolio consists of 20 stocks, for example. Then, among these 20 stocks, about half will keep going up, and the other half will probably have a trend that's not so good. So, moving funds from the stocks that are falling to the ones that are rising, this is called momentum investing. Therefore, what's included in this portfolio here has nothing to do with momentum investing. When I select stocks, as I've mentioned before, there are two things I consider most important. The first is the market potential, how much this market can possibly grow. And the second is how low the current market penetration is in this large market. How many people still aren't using it yet, even now? So if most people around us are already using it or are interested in it, it's already too late. Right now, there aren't many users, but in the near future, more people will become interested and start using it. I think it's very important to focus on this. It's the same with Ethereum. Right now, there are a lot of people who have negative opinions, and many people aren't interested in Ethereum. It's the same with Bitcoin too. There is huge market potential here, but it hasn't gotten much attention yet. That's why I think it's important to focus on these areas. And if you can figure out which products or companies are the best within that, it can be a very efficient way to pick stocks. That's what I personally think. Alright, then this time, I'd like to explain why I became interested in this new asset class called Ethereum, using an article I wrote myself. I wrote this article on August 3rd, so quite a bit of time has passed since then. Now it's September 12th, so it's been about a month and a week since August 3rd. I do wish I had bought Ethereum back then, because since that time, the price of Ethereum has gone up by as much as 33%. So I do regret that I didn't make a decision faster back then. But even so, if you look at this 5-year chart, Ethereum has just broken through its previous high, so it's not really too late timing-wise. If it formed a U-shape and has now broken through its previous high, there's still plenty of possibility that it could start running from now. So instead of obsessing over the past, we should focus on the fact that if Ethereum becomes more popular and gets used more in the future, its price could go up even more. I think that's what we need to pay attention to. Then let me briefly explain the key reasons why interest in Ethereum has suddenly surged. The first reason is the activation of institutional investors and ETFs. This can be considered the most decisive factor. The approval and launch of the Ethereum Spot Exchange-Traded Fund by the United States Securities and Exchange Commission, served as a catalyst. You can see it that way. Because ETFs allow pension funds and asset managers, for example, conservative institutional investors can now legally invest in Ethereum under current regulations. It's like when the Bitcoin Exchange-Traded Fund was first released. You can view it that way. And in fact, over the past few weeks, which means we're talking about July, as billions of dollars flowed into the spot Ethereum Exchange-Traded Fund, the upward pressure on Ethereum's price increased. What about the Ethereum Exchange-Traded Fund? Both institutions and individual investors like us can easily access it. Therefore, it plays a big role in greatly expanding the overall demand for Ethereum. Unfortunately, Ethereum Spot Exchange-Traded Fund S cannot be purchased in Korea or Malaysia. That's one of the reasons why I bought a leveraged exchange-traded fund instead. Secondly, it says the stable growth of the staking ecosystem. What this means is Ethereum uses a method called proof of stake, which is also known as POS. You can deposit your Ethereum holdings into the network, and when you do, you earn interest. So Ethereum is not just a means to store your wealth. Now it has become another asset class that allows those who hold a lot to generate cash flow by earning interest. Recently, in 2025, Ethereum had a major software upgrade called Pectra. The reason why this is important is because of the following. Before that, the maximum staking limit was only 32 Ethereum, which was very small. But suddenly, this limit increased from 32 to 2048. So, if I have a lot of wealth, I could buy a lot of Ethereum and now have a way to earn huge interest income from it. This upgrade provides a more efficient and streamlined staking environment for institutions and large-scale investors. For regular users, it was a great upgrade that allowed them to use wallets that are as intuitive and convenient as today's mobile banking apps, which is very significant. You can think of it this way. And the third one is also very important. You all know that stablecoins are becoming more active since you've heard about this a lot, and this is really important. Because recently, with the passage of the Genius Act in the United States, well, it's been a little while, so maybe it's not that recent. Anyway, regulations for stablecoins have been established, but there's one thing we should pay attention to here. Most major stablecoins, like Tether and Circle, are issued on the Ethereum network. This is an extremely important fact, because there's a high possibility that gas fees will increase. To transfer stablecoins like Tether or United States dollar coin on the Ethereum network, or to use them to buy other tokens and execute various transactions, you must pay a fee called gas fee. So you can think of it as similar to a highway toll. Therefore, you can see Ethereum as a kind of highway. But regardless of the type of car, if you want to use this highway, the Ethereum network, you have to pay the toll, which is the gas fee. There's one important fact here. You can't pay this toll with anything else, not with cash, not with Bitcoin. You can only pay it with Ethereum, no exceptions. So, if the use of stablecoins increases exponentially around the world, and billions or even tens of billions of transactions happen every day, then the only way to pay those enormous transaction fees would be through Ethereum. As a result, Ethereum demand soared, making ownership necessary. I'm giving a lot of credit to this part. You've probably heard of the term network effect. Let me explain it once again. The more users there are on a network and the more applications running on it, the more its value grows exponentially. This is what we call the network effect. If millions globally use tokens on the Ethereum network, such as stablecoins like Tether or United States dollar coin, once that time comes, the user base and influence of the Ethereum platform will likely become incredibly powerful. That's how I interpret it. So in the coming future, the demand for Ethereum is very likely to increase explosively. On the other hand, the total supply of Ethereum is a bit different from Bitcoin, but it is said to be limited. So the supply isn't as strictly limited as Bitcoin, but because there are various conditions and limits, the supply can't increase exponentially like the demand. That's how you should see it. Therefore, this can naturally lead to an increase in the value of Ethereum. So, just like with Bitcoin, the reason I became interested in Ethereum is also a simple one: the law of supply and demand. Therefore, in the coming future, demand is likely to increase exponentially, and the increase in supply probably won't be able to keep up with that demand. So the price is bound to go up. That's how I would interpret it. The last content prepared for today is today's United States stock video. In today's United States stock video, Ed Yardeni appears. He's a very famous Wall Street expert and runs the well-known institution Yardeni Research. He's also well known for being extremely optimistic, almost like a gear. He is well known for his claim that the United States stock market will keep running strong throughout the 2020s. This time, he has raised his target for the S&P 500 in 2025. It would be good to check out this video to see what kind of a rosy future he presents regarding the upcoming interest rate cuts. That's all for today's stock news on September 12th. I sincerely thank everyone who invested with Mijung and me this week. This week I caught a cold, so there were some disruptions in the broadcast. From next week, I hope to recover and show you a healthier side of myself. And as I briefly mentioned earlier, I might have a family vacation on Monday and Tuesday, so I ask for your understanding if there are any disruptions in the broadcast. I hope you all have an enjoyable and productive weekend. I'll gather various information needed for investing in the United States stock market and greet you again next week. Let's all keep fighting together until the day we all retire through investing in United States stocks. Have a happy day. Thank you.
Do you really think that's what it means? Does the market now believe a 50 BP rate cut will happen?
Partially, yes. But what the market definitely knows is that first and second quarter earnings were much better than expected, despite the policy turmoil in Washington. So what the market is actually expecting is that earnings will continue to hit new highs. The reason the market has hit all-time highs is because earnings are at all-time highs. Valuation multiples are high, but I think around 22 is reasonable.
But this rally feels like an interest rate cut rally.
It's partly because of the 25 basis points. I don't think the Fed needs to go for 50 basis points because the market is already easing financial conditions through this kind of rally. Even if the market is disappointed, I think the market will be satisfied enough if the Fed communicates that there will be another 0.25 percentage point cut.
You increased your S&P target from 6,600 to 6,800. If the Fed unexpectedly raises rates by 50 basis points, will you revise your target or make another adjustment?
Of course, to 7,000 really. Yes, next.
It's stocks, yes?
It's a bull market right now. The only question is how bullish you want to be. I think there's a possibility of a melt-up D. A melt-up could push the PER from 22 to 25, similar to 1999.
Some people say that a melt-up has already happened in those stocks. What would you say about that?
Those stocks refer to information technology-related stocks.
These are the same stocks discussed in 1999.
Back then, many of those stocks had no earnings or disappointing results. Today's tech stocks are different. Technology, communication, and service sectors now account for 40% of the S&P 500's market cap. They also account for about 28% of the total earnings. That's why the Magnificent Seven companies are trading at a price-to-earnings ratio of about 30 to 31 times based on future earnings. That's what's happening.
What about the other stocks? That's what everyone wants to know. Predicting value and mega-cap stocks seems easier. But what about the other stocks?
We call it Impressive Focus 3.
Going forward,
I think it will become more and more impressive, and we've achieved good results. It wasn't just the Magnificent Seven that delivered surprising results. Many other companies did as well. The Magnificent Seven need to sell their various technologies to other companies that want to improve productivity, and that's exactly the role of Impressive Focus 3.
could it go to 6,800 or maybe even 7,000? For that to happen, does the rest of the market absolutely have to follow along? Given the current market trend?
I believe this will happen. Actually, I think it's happening now. As you said earlier, even today the market's range is wide. Now, the Fed is signaling that it is ready to cut rates, will actually lower rates, and may make additional cuts after the next meeting. I think we will gradually see the market broaden in the traditional sense. I've been keeping an eye on the performance, but since 2022, it's been pretty much stagnant. However, looking at the consensus forecasts from analysts, there are some signs of recovery, so I think it will perform well without much trouble.
Would you buy small cap stocks at this point?
Yes, unlike when you showed strong optimism about other parts of the market, you don't sound that bullish this time. I believe large cap stocks will stay central to the market. However, from a short-term trading perspective, many investors may see small cap stocks as relatively cheap, and if the Fed actually cuts rates more than once, there's a possibility their earnings could improve.
What do you think are the factors that could shake up the outlook? You said that 6,800 is reasonable right now, and that even 7,000 is possible. What could be obstacles to reaching that target?
Everyone asks me what would happen if the Supreme Court overturns President Trump's tariffs. It could get pretty chaotic. But in my opinion, the market has already signaled that this issue is over. I think the market is moving past that and is more focused on how well the economy has held up despite all of it.
Couldn't that be a big problem? Providing significant relief will alter fiscal deficit projections.
Bond.
You know the market best, so let me ask. I doubt the bond market will quietly accept that news.
In my view, any factor that brings back the fear of a deficit crisis could be a problem. Currently, France, the United Kingdom, and Japan are experiencing deficit crises, and in fact, we are benefiting from that. While our government bond yields have gone down, theirs have actually gone up. However, if the government ends up having to make refunds ranging from $500 billion to $1 trillion, that could increase anxiety and potentially put an end to the year-end rally. It could be that we're just pulling the year-end rally forward right now, and we might have to pay the price for it later.
No matter what, the start of a dream is important. Be ambitious and grow little by little every day. Enjoy today's journey. Even if a dark period comes, I'm not afraid. Retire with United States stocks.